Welcome to the deep dive. Today, we're going to cut through the noise, really get into the details of PCBL Chemical Limited's Q1 FY26 update.
Yeah, we've got the investor presentation, the earnings call transcript.
Exactly. Consider this your fast track to understanding, a really significant player in the global specialty chemical space.
And our mission today really is to unpack PCBL's recent performance, look at their strategic initiatives, where they're headed.
Right.
We want to pull out those crucial insights so you can grasp how this company, they call themselves a resilient conglomerate for tomorrow, is navigating some pretty complex market dynamics.
Yeah, and it's quite a story. PCBL Chemical, they're not just a chemical company, they're a global force.
Definitely.
Think about it. India's largest carbon black producer, seventh largest globally, capacity, 790,000 metric tons per year, 5 locations. It's massive.
And that's not even the whole picture, is it?
Not at all. They're also India's biggest phosphonate producer, top 3 in the world for that. And on top of that, a pretty substantial green power generation capacity, 122 megawatts. So lots of moving parts. Diversified strength.
Okay, so let's dig into the Q1 FY26 numbers then. What did the performance look like?
All right, so the consolidated figures came in. Revenue from operations was Rs 2,114 crore.
Okay.
EBITDA landed at Rs 325 crore. Profit before tax, PBT, that was Rs 120 crore. And profit after tax, PAC, came in at Rs 94 crore.
Got it. Now, I noticed, looking year over year, revenue dipped slightly, about 1.5%.
Yeah, a slight dip. And the EBITDA margin softened a bit, too, from 17% last year, Q1 FY25, down to 15% this quarter, Q1 FY26.
Okay, but the key thing you mentioned earlier, quarter-on-quarter, things look
And
better.
that's the crucial point, yeah. They actually saw solid quarter-on-quarter growth in both sales volume and EBITDA. So given the challenging backdrop you're about to mention, how did they pull that off?
Well, that really is the interesting part, isn't it? While those year-on-year numbers were a bit soft, the QOQ volume and EBITDA growth suggest, that their internal efficiency drives, their diversification strategy, it's already starting to work.
Right, mitigating those external shocks.
Exactly. Management was very clear about the rising global uncertainties. They mentioned the Iran-Israel conflict, India-Pakistan tensions, the Red Sea disruptions.
Well, major headwinds.
Plus potential U.S. tariff risks. And on top of that, you still have some dumping pressure in the Indian market, though maybe moderated a bit. All that definitely squeezed the pricing environment.
Wow, yeah. That sounds like a real minefield to navigate. It makes you wonder how they stay steady in waters that choppy.
Precisely. And despite all those challenges, the headline really is, PCBL delivered a steady and stable performance in Q1, marked particularly by volume growth across all key segments. It speaks volumes about their strategy, doesn't it? Solid foundations even when things outside are, well, uncertain.
Fascinating. So let's peel back the layers then. How did they achieve that resilience? Let's start with the core, their carbon black business. What were the operational highlights there in Q1?
Okay, operationally, carbon black sales volume hit 154,093 metric tons in Q1 FY26.
Right.
That's up 2.6% quarter-on-quarter from Q4 FY25. And that translates to, get this, over 97% capacity utilization.
Wow, nearly full tilt.
Ah!
And profitability, the EBITDA per ton.
Yeah, that stood at a pretty healthy R, 17,791 per metric ton for Q1.
Okay. And what about their market focus, domestic versus export? How are they playing that?
It's a strategic balance, really. Domestic sales volume was just under 90,000 tons, 89,606 to be exact.
Okay.
International sales volume hit about 64,500 tons, which is actually up 2% year on year. Management basically sees India as this super efficient manufacturing hub, right?
Yeah.
And then international markets, especially for the new capacity they're bringing online, that's where they see significant growth opportunities, diversifies their risk.
Makes sense. Now, something really interesting is the shift in their product mix. You mentioned specialty black volume jumped 4.5% QOQ.
Yes, to 16,065 metric tons in Q1.
And the really remarkable thing is specialty black is now over 10% of their total volume. That's huge compared to, what, less than 1% back in 2015?
It's a massive leap.
So for listeners maybe less familiar, what's the big deal about these specialty blacks? Why is that shift so strategic?
This is really where the value comes in. It's about margin expansion.
Okay.
These aren't just slightly different grades. Specialty blacks are advanced materials.
Right.
They go into things like high-performance plastics, pigments, inks, paints, coatings. Very different from the standard rubber black used mainly in tires.
So higher value application.
Exactly. And they command a premium price. We're talking 25–30% higher realization compared to rubber black. Even the performance grades bring in 7–10% more. So this shift, it's not just good for PCBL's bottom line. It really highlights a key trend, Differentiation through high-value specialty products is becoming vital across the chemical industry for better margins and resilience, a lesson for anyone tracking industrial players.
That makes perfect sense. So moving up the value chain, and this aligns with broader market stuff, like what's happening in the global tire industry, right? Since they're a big carbon black consumer.
Absolutely. The tire industry is shifting structurally. Manufacturing is moving towards more cost-effective hubs, like India.
And tariffs play into that, too.
Yeah, higher tariffs on some other major tire exporting nations just gives India an extra edge.
Right. And speaking of shifts and opportunities, there was that news about Orion, a major competitor, planning to close some lines in Europe and North America.
Yes, by the end of this year. That's a significant development.
What does that mean for PCBL?
Well, it's a clear chance for PCBL to grab more global market share. Management basically sees it as proof that older, less efficient plants in those regions just can't compete on cost anymore.
Underscores the whole manufacturing shift.
Exactly. Puts India and PCBL in a pretty good spot. But it's not all smooth sailing. The pricing environment faces strong headwinds, as they put it.
Uncertainty.
Yeah, uncertainty from potential U.S. tariffs. That could impact the next round of contract negotiations starting January 1st. But there are still opportunities where demand outstrips supply, like the U.S. and Europe. And internally, PCBL is really focusing on efficiency, managing working capital, trying to cushion the financial impact.
Okay. And let's not forget another piece of their operation, green power generation. Often overlooked, but it contributes, right? How did that segment do?
It did well. Up 11% year-on-year, generated 215 million units this quarter.
And external sales?
External sales volume grew even faster, 14% year-on-year, to 132 million units. And the net realization was solid, RS 4.7 per kilowatt hour. Shows how they're, cleverly monetizing a byproduct while also boosting their green credentials. Adds incremental EBITDA too.
Good stuff. Okay, let's switch gears now to Aquafarm Chemical. That's their phosphonates and water treatment arm. Remind us, what's Aquafarm's core focus within the PCBL group?
So Aquafarm really cements PCBL's position as India's #1 phosphonate producer, and like you said, top 3 globally.
Right.
Strategically, they're focused on new products, green chemistries. Phosphonates are huge for them, over half their revenue. But the portfolio is broader phosphonates, polymers, green chelates.
And these chemicals are used where exactly?
Well, everywhere. Household products, industrial water treatment, oil and gas, pharma, textiles, pulp and paper. You name it.
So pretty fundamental stuff.
Absolutely. They enhance detergents, stop scale buildup in pipes, prevent corrosion, help optimize chemical use, basically making industries cleaner and more efficient.
Okay, so foundational chemicals. How did Aquafarm actually perform in Q1?
Right. Q1 FY26 figures, revenue was Rs 382 crore, EBITDA came in at Rs 50 crore.
And volume?
Sales volume was 26,523 metric tons, which is up a healthy 8.7% year-on-year.
And they sell globally, right?
Very much so. North America is actually their biggest market, 53% of revenue. Then Europe at 19%, India at 16%, and the rest of the world at 12%. It shows their reach. And growth is coming from expanding into places like Latin America, the U.S., the Middle East.
Okay. Impressive reach, good volume growth. But you mentioned profitability wasn't fully reflecting in Q1. Why was that?
Yeah, that's an important point. The full profit potential wasn't quite there in Q1. Why? Mainly higher trade and freight costs.
Those geopolitical disruptions again.
Exactly. Cost them an extra 6 crore, plus some pricing pressure.
Okay.
But despite that Q1 hiccup, management is sticking to their full-year EBITDA guidance of Rs 300 crore for Aquafarm.
So they expect things to improve?
They do. They anticipate improvement from Q2 onwards, driven by better capacity utilization and, crucially, new capacity coming online.
Right. Capacity expansion. They're definitely pushing ahead there. What's coming up for Aquafarm?
They are. A big one is an 11,500 tons per annum polymer facility at their Mahad plant that's already commissioned. Yeah. And in Q2, they plan to commission more capacity for specialized stuff like PBTC, green chelets, acetyl chloride, amines, a whole range of things.
Wow.
Plus, they're working on debottlenecking brownfield projects in India and the U.S. They actually expect benefits from local U.S. manufacturing because of potential import tariffs there.
Smart move.
It really shows that focus on end-to-end integration, cross-selling across different segments like detergents, oil and gas, water treatment, capturing more value.
Okay, now for something completely different, really forward-looking, nanovase technologies. This sounds exciting. What's the story with nanovase?
Nanobase is,
Mm-hmm.
well, their tagline is powering the future of battery innovation. It's very much IP-led, focused on tackling the big battery challenges:
Mm-hmm.
performance, cost, sustainability.
So aimed at EVs mainly.
Primarily, yes.
Mm-hmm.
The goal is longer range, longer battery life, faster charging, and doing it all with a lower CO2 footprint during production.
And the tech itself.
It's genuinely groundbreaking, they say. It's described as the world's first unique technology platform. It converts silicon precursors into battery-grade nanosilicon, nanowires, and carbon silicon composites.
Wow.
And critically, it uses a single-stage, green electrochemical process.
Now,
That's key.
didn't they just get a U.S. patent for this?
They did. A huge milestone. They received a process patent from the U.S. Patent Office for their method.
They're big.
It really validates their tech, strengthens their IP, and opens doors for partnerships, licensing, eventually commercialization globally.
So, sounds like a potential game changer for batteries. But when will we see this actually, impacting PCBL's results?
So it's still early stages in terms of financials. They expect a pilot plant in Palej, Gujarat, to be commissioned by the end of this calendar year, mainly for sampling.
Okay.
Apparently, there's already strong interest from potential partners across the battery value chain. PCBL's vision here is to build an indigenous ecosystem for battery chemicals in India.
Right, especially with potential shifts away from China for some of these technologies.
It's exactly. Tightening regulations on Chinese battery tech could create opportunities for reliable alternatives like this. But realistically, management says the real impact on the bottom line, you probably won't see that visibly until FY28 or so. It's a long-term play.
Got it. A long-term, potentially very high-reward venture. Okay, so bringing it back to the more immediate future, what does all this mean for PCBL's overall trajectory? Their carbon black expansion plans look really ambitious.
They're robust, absolutely, aiming for 1 million metric tons per annum capacity by FY28. That provides clear growth visibility.
And how are they getting there?
It's phased. Phase 1 of a brownfield expansion in Tamil Nadu, 30,000 tons, has already started trial runs. Should be commissioned in the next few weeks.
Okay, sir.
Then Phase 2, another 60,000 tons, plus 12 megawatts of green power. That's slated for the end of FY26. That gets them to 900,000 tons of carbon black and 134 megawatts of power by FY26.
And they're also looking at greenfield, totally new sites, right?
That's right, planning for the longer term. They're acquiring 116 acres in Andhra Pradesh for a new greenfield plant.
Okay.
That one will focus on rubber blacks and performance chemicals. CapEx starts once they get environmental clearance, and the plant should be ready about 2.5 to 3 years after that.
And more specialty black capacity, too.
Yes, crucially, a new 20,000 MTPA specialty black line is planned for Mundra, expected in the next 3 to 4 quarters. That brings total specialty capacity to 132,000 tons.
Wow.
And another 1,000 tons specifically for superconductive grades is underway in Palej, due by end of FY26. So this expansion, especially in specialty, signals consistent growth and, importantly, an improving margin profile over time.
That makes sense. Now, another really significant project, especially for India, is the acetylene black plant. What's happening there?
This is a major strategic move for them and for the country, really.
Yeah.
Tech transfer is done, engineering work has started.
Okay.
They're setting up India's first acetylene black plant. Initial capacity may be 4,000 to 5,000 tons, but scalable.
And what's acetylene black used for?
It's a high-end conductive material. Think high-voltage power cables, semiconductor packaging, conductive plastics, and paints.
And the key point is?
India currently imports 100% of this stuff.
Yeah.
So PCBL building this plant isn't just a new product line. It's about creating domestic capability for a critical industrial material.
Oh, yeah.
Import substitution.
Very strategic. It's clear PCBL is heavily invested in R&D, expanding the portfolio. What's the vision for the specialty side long term?
The plan is ambitious.
Hmm?
Double the specialty portfolio in the next 5 years.
Double it. Wow.
Yeah, developing new grades for different applications, plastics, pigments, inks, coatings, entering new markets, and just constantly moving up that technology curve to capture higher value.
Okay, and finally, let's touch on the funding for all this expansion and innovation. Their capital allocation strategy. What are the CapEx plans?
They're planning for an average gross CapEx of around Rs 600 crore per year across all the businesses.
And how does that break down?
It's pretty balanced, actually.
Yeah.
Roughly, Rs 200 to 250 crore is earmarked for Nanovus, that future tech.
Okay.
About Rs 125 crore annually for Aquaform's growth. And the rest, the remainder, goes towards expanding and maintaining the core carbon black business. supports both the foundation and the future bets.
Okay. So when we pull all these threads together, what's the big picture takeaway on PCBL? It sounds like they're really evolving.
Definitely. They're transforming into what you might call a multi-chemistry platform, building a portfolio that's diversified and future-ready.
Right. Strengthening the core, but adding these higher margin segments.
Exactly. Specialty blacks, aquafarm, nanovase.
Yeah.
It's all designed to reduce the reliance on just one area, reduce concentration risk, and ultimately enhance profitability. They're not just reacting to global shifts. They seem to be actively adapting and trying to capitalize on them.
So here's a final thought for you, our listener, to chew on. We see PCBL navigating these global uncertainties, these big shifts in manufacturing. They're aggressively investing cutting-edge stuff like nanosilicon for batteries, aiming for self-sufficiency in critical materials like acetylene black. What does this strategy, this blend of traditional industrial strength and forward-looking innovation, tell us about the future of chemicals? How might PCBL's moves reshape not just their own standing, but maybe even India's wider role in global supply chains over the next, say, 10 years? Something to think about.